Thank you everybody for attending this. So just a little bit about myself. What you're seeing NRIZEN on your screen is NRIZEN is a platform for non-resident Indians to invest in India. And I will come to that. Why did I launch that thing? I also manage Pinetree Macro. Pinetree Macro is a global macro fund invest only through ETF because I'm a macro guy. I don't go down to bottom-up stock picking. I only take a top-down approach. There are 2,000 listed ETF globally. I take an asset allocation call. If you want to read more about Pinetree Macro, how it has done, because it has just completed 2 years, you can have a look at the Pinetree Macro website. I'm actually based out of Calgary currently. So let's directly start with our presentation. The presentation is India, the biggest beneficiary of changing global order. And first, I will obviously start with global macro. Uh, I neither look at fundamentals nor look at technicals. There are enough smart people over there, more smarter than me, who have better hang of fundamentals, more smarter than me, who have a better hang of technicals. I only look at only one thing, and that is liquidity. Where is the liquidity flowing? Where is the liquidity being taken out? If the liquidity is flowing in a particular direction, I want to be present. I will be only talking about liquidity. Not many people talk about liquidity, but this is how I've done over a period of time, and it has been immensely successful venture, whether it is Pinetree. So let's go directly jump into the liquidity. What you are seeing in front of your screen is different time stages from the time Mr. Alan Greenspan became the Fed chairman. What you will realize after that thing is after he became the Fed chairman, your boom cycle became longer, your bust cycle became shorter. Why did it happen? The only reason it happened is every time there was kind of recession or LTCM, it was always followed by a huge amount of money printing. So let's start with 1985, 1990. Everybody remembers the Japan bubble, the Nikkei touching 40,000, it has touched 40,000 now this year after 40 years. In 1988-89, Japan was 18% of global GDP, but 48% of global market cap. This bubble burst. Fed again cut the rate, put a lot of money in the market. We had an emerging market bubble. This emerging market bubble burst after LTCM. You would remember around LTCM time. They again cut the rates. The money went into .com. I'm sure some of you would be having those stories of .com type. That is the time I started my career in 1998-99. And I promptly lost my first year salary to this .com bubble in India because I also played that. You just get sucked into a bubble. Then Y2K bubble burst, and then we had an emerging market and a US housing bubble. Again, because Fed cut the rates, they did not allow the normal cycle to play out. They put a lot of money into the system. Then we had an emerging market bubble. Then emerging market bubble, this one you will remember, it is not too far in the past. This is when Lehman Brothers happened. The Lehman Brothers happened, and then this bubble burst. When this bubble burst, then again Fed print the money, and this time the bubble was US, led by US shale boom. In 2009, US oil production was 5 million barrels. By 2023, US oil production was 13 million barrels. And this 8 million barrels led to a reduction in trade deficit in US, lower inflation. The money went into US mega cap tech, the mega cap tech bubble, which was almost bursting in 2023, got a lease of life, some lease of life due to AI. But I am of the view that the USD assets bubble has burst. And this money will again, with the first rate cut, which has just started from Fed, this money will again go to some other part of the world. So let's jump into, before I jump into where it will go, just let's go ahead with what is happening now. After 2020, the government has got a lot of power. So I call it a era of big government. Look at the government expenditure as a percentage of GDP. Government is actually responsible for 50% of GDP in Western world. Look at India at 28%. Europe is out of whack. above 50%. US is closer to 40%. Who would have thought it's a capitalistic country? 40% of US GDP is a result of US government expenditure. And we call US a capitalist country. But what I am trying to say over here is after 2019-20, the COVID crisis, government got power, no question to them. Central banks became, they just listened to what the government said. Since the government got the power, government started spending money, and now government is reluctant to give this power back. Why I'm talking about government power because it has implications to what is happening across the world, including India. But what you are finding is in India, the government expenditure as a percent of the GDP is only 28%, whereas in most of the Western world, it is between 40 and 50%. And I'm sure we have all studied in Economics 101. The bigger the size of the government, the worse is the economic outcome. The second part, there is a government debt as a percentage of GDP. Here I will make a statement, given by, I'm not remembering who gave the statement, but I have the numbers. Since 1800, there are 52 cases of government deficit touching 130% of the GDP. 51 out of 52 countries defaulted on their debt by inflating away the debt or outright default. US debt to GDP is at 123%. The entire Western world, I'm pretty sure they will not default on their debt. What will they do? They will inflate away the debt. Now look at the debt of Western world, including US. Japan is out of whack at 261%. Actually, Japan is the only modern day wonder which has not defaulted on its debt. Look at India's debt to GDP and Germany's debt to GDP. India is very low. So India has a very low government as a percentage of GDP. India has a very low government debt as a percentage of GDP. But what I'm trying to say over here is governments are becoming bigger, government deficits are becoming bigger, and governments are deciding winners and losers. If you think that you want to start a business, you want to get into some particular sector, I would say first listen to the government. If the government is saying they like a particular sector, liquidity will flow in that sector. If the government says they don't like a sector, the liquidity will not be there in the sector. Government is taking away resources from one part of the economy to give it to the other part of the economy. Look at the number of industrial policy measures implemented in 2023. Look at the number of subsidy policies in force. And look at after 2019-20, it's a vertical incline. You might be very good in a particular business. If the government does not support that particular industry or business, you will struggle because government is the economy. And that is where I have this book with me. It's a must-read book if anybody wants to get into more into that. The corruption of government. I'm not saying anything is right or wrong, whether we should have a bigger government or a smaller government. I'm an investor. I will invest where the liquidity is going. And here is the government in front of me across the world, including India. What is India doing on the government policy is a separate thing. I will talk about it. But this is globally happening. A couple of weeks back, Europe decided. Europe came out with an independent report of they want to industrialize. US want to industrialize. India want to industrialize. How are they industrializing? By giving subsidies. They have targeted some sectors. So I'm going to talk about those sectors also. But the whole point till now I wanted to put over here is governments are becoming bigger. Don't fight the government. Do what the government wants to do. You might have your own opinion, but don't go against the government till the time they have this power. I had to come back to gold for the simple reason that gold is an essential part of monetary system and it is getting back that part. So the system was very clear. US will buy oil from OPEC. OPEC countries will take that dollar and reinvest that into US Treasury. Then it started in 2001 with China. China was also told, we will buy from you. You will get that dollar, invest in that US Treasuries. In 2014, China stopped investing their surpluses in US Treasuries. And China started using that surpluses in dollar to build one belt, one road. Now you will see that in 2020, it is a complete collapse of foreign official purchase of US treasuries. What happened in 2020? Ukraine-Russia war, Russia's foreign exchange lying with US banks in New York was sanctioned and confiscated. And that day, the international world order was broken. Think about a country like India, which is not on the right side of US, but has FX reserves, which are lying in USD. If they are lying in USD, they will most probably be lying within US jurisdiction. That means US can tomorrow, if they doesn't like India, it can confiscate India's FX reserves. That is the day international system was broken. And that is the day more and more central banks started buying gold and they started using that US dollar accumulated into buying things across the world. Like Saudi Arabia is putting money in Saudi Arabian wealth fund. India is going to come out with a wealth fund. Everybody is coming out with their own wealth fund because they do not want to recycle their surpluses into US or US treasuries anymore. And this is a very, very big change. See the price of gold from 2020 and you will have an answer in front of you. I will give you some more interesting places where this money is going. So remember my first slide, it is the liquidity which I look at. Where is this liquidity going? Gold was an easy call. After that, what is the other calls? I'm going to talk about that. A little bit about BRICS versus G7. In a changing world, why are we so focused on G7? Look at the share of global GDP, look at the share of world population, share of global oil production, and contribution to world economic growth in 2024 to 2029. It's a complete change happening in front of you. Today, US only contributes 25% to the global GDP, but 70% of global market cap is US. Think about what happened in 1989. 18% of the global GDP, Japan, 48% of the global market cap, and the bubble burst. Today, it is a much, much, much bigger bubble, and all the money is hiding into US equities. I strongly believe this bubble is bursting in front of eye. The thing is, it's a slow balloon where the money is moving out very slowly. This is the future. This is where the money will be moving. Now, on 22nd to 24th of October next month, there is a very important summit in Kazan, Russia, where they might introduce a new BRICS currency. A currency which has some element of gold, but it has been kept under wraps. Keep an eye on that. Gold is already talking something. Dollar index is almost on the verge of breaking down below 100. Euro, Canadian dollar is moving up. Asian currencies are moving up. Chinese yuan is below 7, appreciating. Something is changing in global monetary system. And who knows, 22nd or 24th, if it is a credible alternative which BRICS is able to present, something might change just ahead of US presidential elections. But the important point is, why should we hold gold in our FX reserves? Sorry, why should we hold US dollar in our FX reserves? Because anytime you can confiscate our US dollar. So why should we hold it? So all these currencies, all these countries are thinking about diversifying again outside of USD and looking to buy different assets, invest in different countries, buy gold, and lots of other things. I believe India is the biggest beneficiary of this changing world order. And for the simple reason is, India is the only non-aligned country in the world. We are not aligned with anybody. India will do what is right for India. Forget what is right for rest of the world. So these are just the IMF numbers. You have all seen the numbers. $5 trillion economy in another 3 years. But I do not look at just the size of the economy. For me, what is more important is GDP per capita. And I'm very interested to see that we could be talking about more than a $5,000 per capita GDP in another 5-6 years. Think about a 1.4 billion population. a $5,000 per capita GDP. It's a dream for any global corporation to do business in India. Now, as I said, cheap oil from Russia, defense tech from US and France, and investment from rest of the world. These are just the headlines in the last 2-3 months. You are able to buy oil from Russia in INR. You are able to sign defense contract with US and France. Whatever is US is not giving to us, France is giving to India. And you are able to get investment from rest of the world. India, Canada does not have good relationship, but Canada pension plan continues to invest in India. India EFTA trade deal is just a $100 billion deal. This is 4 countries which are not part of Euro. They've just decided to invest $100 billion in India. When you're looking at sovereign wealth fund in Abu Dhabi, this is the money which should normally go into US Treasury is getting invested in India. And below is the biggest news in my view. India edges warily towards accepting more Chinese investments. 2 years back, they stopped investing money, they stopped taking money from China. But now I believe the border dispute will be solved. We have a $100 billion trade deficit with China. What India will be telling China is, your money is welcome, invest in our country, give jobs to our people, and sell in our country and sell globally. This is a sea change happening. Everybody in the world wants to have investment in India. And today, I think Mr. Jamie Dimon made some kind of reference about this thing. But why is it happening? All of it is happening. Had US not or G7 not sanctioned Russia's FX reserves, this lazy sovereign wealth fund money, this European money would not have found its way into India. The world order would not have changed. The new world order is allowing India to benefit because it was rightly positioned. Some more. What you are seeing over here in gray is normally people don't look at that thing. This is EM ex China exports to EM ex China. Forget China. We know China is a behemoth. But see how the countries are trading with each other and how it has risen dramatically in the last 3-4 years. Russia-India trade volume. So India buy oil from Russia, gives them INR. The INR is lying with an Indian bank. And that INR, Russia can use to buy goods and services from India. India is exporting air defense system to Armenia. India makes its play for Africa and brought them into G20. What you are seeing is it's a multipolar world which is coming out because the globalization is changing. It's not deglobalization. It's just that we have changed globalization now. Increasingly, incrementally, we will have country-to-country relationships. And this EM to EM is a very big thing where India is having these relationships. India is not the only beneficiary, obviously. The entire Southeast Asia is a big beneficiary of this thing. This is one more thing which a lot of people did not talk about it. This is how US also popularized, Europe also popularized, its investment destination. India is giving, currencies is now having a currency swap arrangement with SAARC countries, where they will not be worried about if they run out of the FX reserves. They can always rely on Reserve Bank of India to give them a swap line which can be used to buy goods and services from India. It never used to happen earlier. It's just a $4 billion line to start with, but it can incrementally become very big. And that is the reason India continues to accumulate FX reserves, but not investing in US treasuries anymore. In fact, in the last 1 year, India has accumulated, I think, closer to 93 billion in FX reserves, but has invested zero in FX in US treasuries. So where is this money going? India is also looking to have a sovereign wealth fund, looking to have relationship with other countries, giving them line of credit for them to buy goods and services from India. This is an eye-opener. Everybody knows Indians have gold. How much gold does India has? This is World Gold Council's number. Indians at household level, you know, I'm fond of saying women of house, women, Indian women are much richer than Indian men. 25,000 tons of gold Indians have. The value of that gold was 1.8 trillion at the start of the year. The value of that gold as of now is 2.3 trillion at household, not the gold with our government, with our reserve bank. That's a separate one. So today, Indians at household level have $2.3 trillion worth of gold. And the question people ask is how much of it is monetized? Only $100 billion worth of gold loans are outstanding in India. India's total GDP is $3.4 trillion. And this year, from gold alone, they are rich by $500 billion. This year in India, real estate has gone up, equities have gone up, and gold has gone up. All the assets have gone up. This is where you find, yes, this is a wealth effect. If you're asking me, is it an income effect? No, it's a wealth effect. But that's what happened in Western world. No, they invest, they spend based on wealth effect. They don't spend based on income effect. There's a strong Indian household balance sheet. Just look at the household leverage in India. There's hardly any household leverage in India. Compared to the Western world, there is absolutely no leverage. And add to that the gold gain of this year, and people are breaking their heads. What is happening to this? How are Indians spending so much money? They're spending money because their wealth has gone up and they are not leveraged. Yes, they are leveraging at increasingly rapid pace, but it's not much. So this is what is happening. Look at the corporate level, the capex, the government level capex, the household level capex in India. Government was the one which obviously started because corporates were not willing to do. Now corporates are willing to do. And on the right, you will see gross debt to equity ratio of Indian corporates. So Indian government is not leveraged, Indian household is not leveraged, and Indian corporate is not leveraged. Where will you find all the three? And India is a very diversified economy. It does not depend only on oil revenues or commodities. We have breadth of sectors in India. This is my favorite slide because demographics is the most important thing in my view at this point of time. And the entire migration which you are seeing in the Western world has to do with because the society is becoming aged. They need young workers to come and contribute to the society so that they can pay for the people who are retiring in those countries. That experiment is failing. That's a separate thing altogether. But look at it with this chart. The 65, where the green line and the red line. The red line is 0 to 14 and the green line is 65. 65-year plus will overtake 0 to 14 by 2057. It happened in Japan in 1986. It happened in entire Western world outside of US by 2016, including China. US happened in 2023. The question keeps on coming to me is, fine, you guys have big part of your population as young population, but what good is that population when you cannot provide them jobs? Absolutely right. And that is a question which I'm going to answer based on what the government is thinking. Because the government has all the levers, and if the government is saying, we also understand the problem and we are trying to solve that problem, so how are they going to solve the problem? Here, I will take 2 minutes of your time. India leapfrogged manufacturing and directly went into services. We had good digital infra, we did not have good physical infra. Every country goes through a normal transition of first manufacturing and then services because manufacturing creates 3 to 4 times job that of services. So what you find in India is India GDP has done well. Today, services are 50% of the GDP, but manufacturing is only 15% of the GDP. But both services and manufacturing have almost the same number of jobs. What does that mean? That means that whatever India growth has come, it has come because of services, but it is a jobless growth because we leapfrogged manufacturing. The government understood this problem. 2-3 years back, we started our work on, can we go back to basics and go back to manufacturing? And that is my biggest thesis. India is trying to do what it should have done before coming into services. And that means the winners of tomorrow will be completely different than the winners of today. But I'm saying that thing for the last 2 years. Okay, it has changed a lot still. So I'm going to take you through all of this thing. This is a slide from HDFC Mutual Fund, which came out with a manufacturing fund. Every country which started, so India's nominal GDP, some numbers in front of you. India is starting its journey on manufacturing. Manufacturing is 15% of the GDP. There are countries which started their journey at X on manufacturing. And within 5-7 years, what happened to their real GDP? What was the start of the manufacturing? What is the end of the manufacturing? Can we by 2030, can we have 20 to 22% of the GDP of India coming from manufacturing? It's just a question mark. Can 15% go to 18, 19, 20? If it can, the winners of tomorrow, where you should be investing in India, where you should be working in India, where you should be tying up in India, is completely different than what you have been doing it for the last few years. Look, I am also a product of that service-led boom in India. I was in the right industry at the right point of time. An average guy became chief investment officer at the age of 36, right? Because industry was booming. So if an average guy also becomes a part of the liquidity cycle, then you also rise along with the liquidity. Here is the Indian government which has decided to do. There is enough talks in media, and I have a lot of data also based on that thing, to move the needle on manufacturing from 15% to something higher in the future. Let's see what they've done, what they're planning to do. These are the small manufacturing successes of India in the last 3-4 years. iPhone, you would have heard. Maruti Suzuki has just exported 1600 made in India SUV to Japan. Think about it, you filling up big ships, made in India cars, going to Japan. China vacated toy manufacturing. India just took the entire toy manufacturing from China. I'm going to talk more about electronics, but these are some of the recent successes which India is having apart from defense. Vineet, if you want, sorry, it's too late to ask that question, but if you want me to go slow or fast, just let me know.
I think we're good on the pace. Yeah, we're good.
Okay. Just look at the India's export basket. 2018, electronics was 9th. 2024, electronics good is 4th. And this is what the government has decided through production linked incentive. Government has said, I'm putting money over here. This is the subsidy. This is production linked incentive. I want this to work. Indian government is no more different than what is happening in US, where they're talking about clean and green energy or electrification, or in Eurozone, where they're talking about green energy. Indian government is no more different. In today's world, corporate world is not willing to put their money unless the government is backing them. So the government said, I'm backing you in electronics. This is what has happened. I will not be surprised by 2030, electronics good is the #1 export item from India. Who would have thought by 2032, I can be very comfortable, confident giving this number. Electronics export alone, electronics production alone will be 8% of India's GDP at $600 billion. See from where it started in 2015. When we were making refurbished phone in India, iPhone 6 or 7, And this year, India is making is the wrong word, is assembling iPhone 16 on the same day it is coming out of factory in India, when it's coming out of China. Same day. Think of Apple as a brand ambassador. If Apple can do it, everybody can do it. Foxconn is putting $1 billion for some mobile facility in Tamil Nadu. This is a game changer. If it can happen for 3-4 different sectors, it's a completely different thing happening on India, and I will tell you where it is all happening. Now, you cannot manufacture unless you have cheap and clean energy. There is no energy poor, rich country in the world. Now we have all come to a conclusion after breaking our head for so many years that nuclear energy is the best form of energy. Now look at the cost, nuclear power cost comparison. US is 4 times that of India on the left. The country which produces the largest number of nuclear engineers in the world, as per Gavikal research, it's not China or US, it is India. You're right, you will see the number of nuclear reactors under construction across the world. Obviously, China has taken the lead. India is number 2. US has 0 under construction. So you are producing nuclear energy at 1/4 the cost of US, and you are having so many of the nuclear power plant under construction, and US has 0. They're still in policy paralysis. Although now with Microsoft and other hyperscalers are tying up to get the old nuclear power plant restarted. Always remember, there is no energy poor, rich country in the world. Now comes to something which was unheard of in India, defense exports. India will be having a defense export of $6 billion in another 4 years. India is sending some of these missiles and all to places like Africa. Yes, you cannot compete with, obviously, with Europe and US, but they are so costly. India made ammunition is going to Germany, which obviously Germany is sending to Ukraine, but they're making it in India. This is one more area where suddenly out of nowhere, India has started doing very well. We have opened it to private sector. This news is very close to my heart. I have been to this factory, Tata Lockheed Martin factory. I think it is in Hyderabad. I was the chief investment officer for Tata Mutual Fund, so I was given a private tour of this factory. At that point of time, we had very highly qualified people working in that factory, but they were not doing much. They were only doing basic assembling, simply because US was not willing to do any technology transfer to India. But the factory existed, this joint venture existed. Now see what has happened. It is just the news has come 10 days back, that we will no more be doing only assembling, the technology transfer will happen, and India will be making this thing. Obviously, it will be for India, but it will be for exports also. GE Vernova's CEO was in India, opening up a factory of a $1.5 billion defense tech company just a couple of months back. So US wants to do technology transfer to India. France says to India, okay, whatever US is not giving, we are willing to give it to you. So here you are having make in India, make for India, exports from India. And who doesn't like India? We are not a non-aligned country, neither Western world nor Eastern world. Now there is one more thing which is happening, which is slowly happening. NRIs, non-resident Indians across the world, are now annually sending $100 billion to India. And on the right, you see something very different. Japan, Taiwan, South Korea, that part, plus other countries like Israel, now wants Indian workers. Indian workers are hardworking, disciplined, and India is the country which is now exporting workers. We're not talking about Middle East. We're talking about workers across the world. Whether it is tech, blue collar work, India is becoming a factory of the world to export workers, people. And what will these people do? These people will send hard-earned foreign exchange back to India. And this will solve, to some extent, maybe some dots here and there, solve some problem of that, that demographic dividend turning into a demographic liability. Hope so it will not happen. This is one thing on which I got a lot of pushback when I said that IT jobs are actually, coming to an end in India, because a lot of jobs are going to Vietnam, Philippines, and now Argentina. But what is happening on the other side is there is a very solid rise of global capacity centers in India. A lot of these companies are now setting up their own capacity centers. So whatever you lose on IT, you will more than that gain in global capacity centers. I believe India's IT headcount will stop rising, but GCC headcount will rise dramatically in the coming years. Just look at on the left export from GCC over the last 10 years. This is going to be the next big thing for India. Why? India generates about 20% of global data, but none of the data is stored in India. It is stored across the world, possibly in the Western world. More and more countries, more and more government across the world do not want their data to lie outside their own jurisdiction. So they are coming out with policies, our data under our sovereignty. So you will see a massive data boom in India. But whatever I've said till now requires cheap and clean power for India to do it. And that's why that is one of my themes which I am talking about for the last couple of years, but that I will continue later on. But this is one more opportunity for India. You cannot train your AI models with Indian data lying outside the Indian jurisdiction. Indian government is not going to allow that thing. Tourism. This is where you can employ large number of people. What do you require for tourism? What you require is good roads, airports, basically good infrastructure. Because India is not short of good places, but you did not have, good infrastructure. And as I've been saying, we leapfrog physical infra directly went into digital infra. Now we are building physical infra. So you can see the length of our national highways. You can see the number of airports now in India. It has doubled in the last 10 years. And so these are the three big things: tourism, medical tourism, religious tourism. India is becoming very, very big in medical tourism. From across the world, basically, but more so from, I think, from Middle East. More and more people are coming to India because it is very cheap, reliable. We have great doctors, great infrastructure. This is where you earn a lot of foreign exchange. You employ a lot of people. Religious tourism is going to become a big part in India in the coming years. So this is one, and tourism needs a lot of people. A lot of people can be employed. Now here is something a little bit different. At one point of time, our benchmark, 55% of our benchmarks were made up of services. I'm talking about Nifty and BSE. Basically, BFSI plus IT was 55% of the benchmark. And that is what FI understood about India. If you see over the last 2 years, both IT and BFSI are not moving. But the money is moving to other parts of the economy where the government is pushing a lot of things. So if the government is saying incremental future is coming from manufacturing, the manufacturing is not properly represented in our benchmarks. Hence, I strongly believe that more money will be made outside the benchmark. And I'm talking about it for the last 2 years. I will continue to say this thing till the time we see that manufacturing GDP needle moves from 15% of GDP to 20% in another 4 or 5 years. But you yourself can see the weight. In 2019, communication services, whatever it was, 49%. Financials was 49%. Today, financial itself is 39%. Look at on the right, the financials weight of FPIs in December 2023 was 34%. It itself is down to 31%. So I say, I would here make a strong statement again. India's benchmark do not represent tomorrow's India. Tomorrow's India is not there in the benchmark because tomorrow's India's profit pool is not going to come from the benchmark. So just last three slides. India leapfrogged manufacturing and went directly into services. Services don't create as many jobs as manufacturing, hence jobless growth. India now focusing on transitioning to manufacturing and hence focus on physical infrastructure and energy security. Skill requirements and market winners are going to be different. So what is the market outlook? Buying energy non-USD has insulated India from volatility in oil prices. Government focus on this transition from services to incremental manufacturing should be taken seriously. I take every government action seriously. Manufacturing energy transition is not easy and will require lots of energy. Hence, electrification, defense tech, and tourism continues to be our macro theme of the decade for India. PFSI NIM will structurally contract as investors get more revenues for investments in India. The transition also means that sectors which are rightly placed will continue to do well in spite of any market cap. And just keep this thing in my mind. This last one is there for the last 2 years. Finally, in this brave new world, listen to the government or regulators. If they don't like anything, don't touch. If they're focusing on developing some part of economy, then it's a no-brainer. And just about NRIZEN, but only NRIs or even resident Indians can invest. Based on this thinking process, which you heard for the last 45 minutes, basically the monologue, I curated a basket of funds which I believe were aligned with my views. So that fund basket is off to a good start. You can click on the link and you will read more about what those funds are, how the performance of that fund is there, and you can take it from there. You can also visit NRIZEN, or you can, if you are interested in knowing more about India, because I keep on writing a lot about it, you can follow me on LinkedIn and Twitter, where I post a lot of stuff about India and globally. So yeah, thank you. And I have to show this slide for the compliance purpose. Okay, guys, I hope I've not taken much of your time.
I think we're good on time. So I think I would like to open it up to questions. So if you have any questions, please let us know. Maybe I can just kick off the round of questions. To begin with, Ritesh, India has never been known too much to be the R&D center, right? Like the R&D spend has always been low. And I think you've, in the presentation, touched about how a lot of the collaborations are ways of transferring technology and allowing for ensuring that a lot of the manufacturing that India is supposed to get done or expected to get done, we have the right capability for that, right? Do you see that changing, or do you think that is the trend? The trend that we will keep importing the R&D and the technology and the know-how from the Western world, and then develop the manufacturing capability for that, and with time own the IP, or how do you see that moving along?
No, you are right. I don't think we have the capability as of now. Think of it as a $3,000 per capita GDP economy. You will continue to import it from the Western world. You will not reinvent the wheel in most of the things. You will get the technology from them. Most of them are willing to, and when most of them are willing to open their technology for you, then why would you want to do the hard work? Then you will want them, you will invite them, have joint venture over there, give some government support, and get them ready to work with. India is not present when I look at any of the patent technologies across the world or the research papers across the world. India is not there in top 20 till now. Once it becomes rich, it's a separate thing altogether. But it is actually, once you have to be rich to become technology rich. And India is not rich as of now.
Yeah, got it. Well, I think the next question is just about the valuations in India have always been a challenge. I think today we
Yeah,
focus a lot more on just the economy and the GDP growth, and this is more longer term in nature, right? Like this is more of
yeah.
a decadal view. But in the short term, because there's so much money which is looking to invest in India, valuations don't seem to be cheap, right, compared to the historicals. Um, how do you look at that? How do you look at
Yep.
investing when valuations are a little expensive?
So let me put it this way. As I've said, I'm not going to touch BFSI or IT part, the yesteryear's winner.
Mhm.
I'm very clearly focused on what the government wants to achieve. And there are only handfuls of listed companies over there. I can see the euphoria in the short term, but the way 401k changed US, the same way SIP culture in India will change India. SIP, NPS, and plus on top of that thing, I strongly believe NRIs, which are becoming very uncomfortable in the Western world, where you have a job insecurity, you might or might not get your pensions also. They are also looking to reinvest in India. So every time you have a correction in India, it is very short and sharp. You need to have, at this point of time, if somebody asking me how to invest in India, this is my view that we are headed for a time correction. We have to digest this gain. So if there is a new money which is going to come, I say invest 25%. 75% has to go over 2 years or 3 years because we need to first digest this gain. If we continue to move up, this bubble will burst very fast. In my view, this bubble is a very long-term bubble. Probably will be there for another 4, 5, 6 years. By that point of time, we'll be discounting the next 10 years of earnings also. But for the time being, we could see the time correction, and we have a timely news from China where every global fund manager is underinvested. India, everybody loves India and US. Some kind of money can leave India, US for China.
Last question on my side. You didn't touch much upon pharmaceuticals or chemicals manufacturing. Just curious to know your views on that.
My understanding is limited over there. I've not built up my capabilities over there. Just to, thinking process and all, I did not get time for that.
Got it. Thanks for that. Thanks for the candor. Anybody has any comment? Go ahead.
Thank you for speaking with us. Super helpful. I was wondering what you think the role education plays for India. I mean, when corporations come to India, one thing they say is that Indians are overeducated and tend to be underskilled, so that they're not hireable as much. And so, what role do you see like education play in that, or is it not education related?
Let me put it this way that India government understands this thing. They're trying to implement a policy where top 500 companies will hire these educated people on the dime of the government, and they will skill these people. They're starting with this pilot program, I think, next year, because government understands that this is that part of the domain which I cannot influence myself. So the work has started on that thing. But your argument is absolutely right. On one hand, we have institutions like IIMs and IIT, which are a completely different, which are world class, and on the other hand, does not have anything in middle. Everything else is at the bottom. So we need to have those people who are educated but unqualified at the lower end. At the highest end, it is educated and overqualified. So the underskilled workers will actually be given some kind of stipend internship with the top 500 companies in India to reskill them. So that is a pilot program. I think you can read about it. Indian government is going to implement that thing.
Hi, thank you so much for speaking with us today. Are there certain industries that you feel like the Indian government is very opposed to developing, that either from a regulatory standpoint or not exploring economically?
Yeah, like rest of the world, green and clean energy. We cannot continue to burn coal. Look, we are already having a problem of pollution without any manufacturing revolution. Now you're going to have a manufacturing revolution. How are you going to have a manufacturing revolution? It cannot be done with coal. If you try doing it with coal, Europe and US will put tariff because they say in our country we don't use coal. You are using coal. You will have to pay for carbon. So Indian government is spending huge amount of money, and that is why I've written electrification. Whether it is data centers, whether it is EV charging, okay, whether it is putting more manufacturing, everything requires one thing: cheap and reliable electricity. And that is not true only for India. Even in US, Elon Musk is saying the same thing. Microsoft is saying the same thing. Everybody is saying we have each and everything except electricity. We need cheap and reliable electricity. So I would say electrification continues to be my macro theme of the decade, the number one.
And as a follow-up on that, India's benefited as being a very valuable trading partner because as the geopolitical risks of, let's say, the neighboring countries has increased, specifically Bangladesh, Pakistan,
Yep.
and then the slowdown, the at least temporary slowdown that we're seeing in China. A lot of these things will start correcting over time, and a lot of those countries will also have an appetite to develop and grow. How does India actually develop allyships with these countries where, relationships have always been very tenuous in the past, where we've struggled to maintain cordial relationships with China, with Pakistan, and, we're having this very large issue right now in Bangladesh as well.
Let me put it this way that, if you become economically powerful and you have global corporations working in India with large number of their people working in India, that itself is deterrent for anybody to do mischief with your country. So you become so big that others become so small. So today, Bangladesh is not consequential for India. If India does not give power to Bangladesh, the entire industry will stop, and that is what they've started doing. We cannot compare ourselves to Pakistan. India's electronics as a percentage of GDP in 2032, only electronics, will be bigger than Pakistan's GDP in 2032. How does it matter? I can understand the nuclear armed state, but beyond that thing, yes, we will have to spend more on defense on all the sides. But once you become economically powerful, then it becomes a small part of the bigger percentages. It's all about percentages. And China is a very interesting thing which you've asked. We've had a very, the relationship with China has not been good for some time. There was some kind of a doklam, which we call about, where we had, conflict with China. We forced Chinese companies to sell their investments in India. What I'm getting the sense now over the last 3-4 months is that that border dispute, in my view, will be solved. In exchange for China has started having, just starting to introduce again the flights to India. And I believe Chinese companies are again being asked to invest in India. Look, our trade deficit with China has gone from $50 billion to $100 billion in the last 5 years. Whatever said and done, they produce cheap and in bulk quantity. We cannot continue to have that thing. So India is now inviting Chinese entrepreneurs, come invest in India, employ Indian people, make for India, and export from India. So you will find that India-China relationship will change. Yes, economic rivalry will be there, but for China, it will be a very big thing to invest, get a hold in India, to invest in India. Their corporation will be allowed to invest in India. I'm very, very bullish on that thing, and that will change a lot of things for India. Because Indian corporates are very reluctant to invest in India. Every time you ask them, why are you reluctant to invest in India? The government is doing its job. Government is already putting a lot of money. You have to also now put in some money. They say China is so cheap. If they start dumping their products in India, we stand no chance. So we always live behind trade and tariff barriers. So the government is now saying, okay, we'll allow Chinese itself to come in India and invest in India. So that is what is changing. Pakistan, Bangladesh is not even a point of discussion. It's all in media.
Good question.
Thank you. That was very compelling.
Sorry, having said that thing, I must confess over here, I'm sitting 5,000 miles away in Calgary. I'm not sitting in India. So I do not have the ground information about what is happening at the border. I only hear what is there in the media. Sorry, you can continue now.
So I was just saying thank you. That was very compelling. So, I mean, India is a democracy, right? And for a very long time, it looked like the government wouldn't change. But, this past year, the elections did spring a bit of a surprise. How much of what you've said is, I guess, contingent on continuance of the current government?
5 years back, my answer would have been democracy is bigger than leaders. But today, leaders have become bigger than democracy. And it is not only true for India. I'm not singling out a leader. Across the world, it is the same thing. And this is after COVID. As I've said, after COVID, government is now holding the power. Government is holding money. Government is holding power. Government is deciding winners and losers. And hence, a powerful government means it is very important for this theory to continue working. You cannot have change in policies. And I get that sense. I wish I could have said democracies are bigger. No, it's a misnomer.
Ritesh, one question that you partly alluded to was that everywhere in the world, everybody, like countries like the US and a lot of Europe, is also looking inward and trying to get a lot of manufacturing within their own countries, right? So,
yes,
how do you see that happening? Like, is there going to be capacity creation everywhere in the world? Like, is there going to be is there enough demand that's there to fill up so much supply, or will you see naturally the older factories shutting down? Will you see a lot of just factories moving borders, or how do you see the demand supply of just given that everybody wants to have manufacturing within their own borders?
Look, till the time there was only one world power, it did not matter. US was a bully in the world. It's like a prefect in the class. The entire class is quiet because it's a bully. Now somebody wants to challenge him. And this is a guy which is having huge amount of capacities exports to rest of the world. And now you're saying that rest of the world is not willing to accept your greenbacks anymore. In exchange for what? You only continue to print greenbacks and send it to rest of the world. And they send you goods and services. Now those people are saying, we also want power. US is saying, we don't want to give you power. So what America is trying to do is saying, okay, I think we've seen the end of our dollar reserve empire as such. Now we need to get our jobs back. 73% of people in US, as per the Gallup survey, would prefer unionization at this point of time. People want their jobs back, and that is what they're voting on. Trump got voted based on the people who wanted to get their jobs back. So globalization is dead in that sense. And nobody understands this thing better than politicians. Politicians says, I will get votes if I get his jobs back. So corporates, which got fattened bottom line from 2002 to 2020-21 because of offshoring everything to China, are now going to pay more to the workers. You can look at Boeing, what is happening in Boeing and what kind of port strike is happening in US and Canada. All that means that we want our supply chains near to our shore. Trump would want not near to the shore. He would want it in US. Otherwise, USMCA is where you can have this thing reshoring done. We want our supply chains near our shore. We want to produce everything. And we will make ourselves an island which is cut off from rest of the world by putting trade and tariff barrier. Now, it is the responsibility of the reserve currency of the world to share its GDP with everybody, okay, and run current account deficit so that its currency is internationalized. Now, US is no more willing to do that thing because the public opinion has changed. And in that kind of, if US is not willing to do, every country is saying exactly the same thing. Now, how could every country follow the US? The reason is WTO is dead. You cannot go to WTO and cry that they have put a trade and tariff barrier against me. In fact, half of the judges have not been replaced in WTO in the last 2 years. It's a defunct body now. And US has made it defunct because it wanted its job back. It wanted its manufacturing back. And since WTO has become defunct, India also wants to do the same thing. Europe also wants to do the same thing. In the good old world, where every country was talking to each other and every country said, okay, we will listen to the global bodies, that world is over. Public opinion wants it. So we will create trade and tariff barrier. We will be in India, in US. We will ask people to come and invest in our countries. We will ask our allies to invest in country. Look at what we did to TSMC in Arizona. We arm twisted TSMC to invest in Arizona. Think about it. What is happening and changing in the world now? This is no more a globalization. It is a re-globalization or globalization which is changing in front of our eyes. When it comes to supply and demand, which you are talking about, who has seen it? What will happen after 5-7 years? For the time being, liquidity is going to flow in that particular direction. US electricity grid is 35 years old. Massive amount of money will be invested in US electricity grid over the next 5-6 years. US manufacturing employment is going through the roof. Look at the charts of the factories under construction in US. Through the roof, we've not seen in the last 30 years. It's happening. What will be the outcome 5-7 years back down the line, whether the demand for the product will be there or not, whether these factories are completed or not? Who has seen that? But at least from now till then, massive amount of money will be made or lost.
Any other questions? Go ahead.
Thanks for being here. I have a question about the government. After the third election, the Modi has won his third term. However, he didn't win the majority seats. I wonder what would be the implications for his policy making, and where do you see, is there any potential challenges for his leadership?
I would need somebody to repeat the question, please.
Maybe Leslie, you can let me know if I got your question right. I think the question was more around the fact that in the third term of Modi right now, he did not win majority seats. And how will that impact policy making in India? Will there be any difference compared to earlier? Is that the right?
Actually, it's a very good question. It's a win for the democracy. Now, earlier, you could say that there were no checks and balances in place. Now you can say there are checks and balances in place, right? Because if you're not winning the outright majority, you're dependent upon partners, okay? And those partners can change, if your policies are not, more towards center. Then I would say it's a win for the democracy for the time being, because we have put some more checks and balances on the power of an individual. And this also means that if some things which were to be done in 3-6 months period of time or a very short period of time now will require approval from a larger audience to be done, and it will take a little bit more time.
And thank you for coming. I had a quick question. So I think much of India's growth in the past few years, like past 10, 20 years, has been concentrated in your tier 1 cities, like in your Delhi, Mumbai, Bangalore. Yep. And I'm wondering if you think that's going to be true for the next upcoming years, or if you see that changing.
Very good question. I have written it for the last 2 years. India leapfrog manufacturing went into services. Where do all these people stay? These people stay in metros. So you had two India. One is a poor India, one is a rich India. Rich India in metros. Metro real estate prices went up because all these people got their ESOPs. Stock prices went up, good salaries. And this is what happened in India. Now for the next few years, I believe real estate in metros have topped. Top means you will not see prices going up for another 5-7 years. Honestly, where I stay in Chembur in Bombay, from 2014 till 2023, it is the same price. Okay, already we are seeing the time correction. If the incremental GDP of India is going to come up not from metros, outside of metros, then the real estate boom will shift from tier 1 to tier 2 cities. It has already happened. Now it will go to tier 3 cities where the land is still cheap. You can still put up some new manufacturing capacities. That is where it will. Wherever Foxconn will put new factories, wherever new electrification, transformer companies will come. Where is Apple putting new factories? That is where the new growth will come, and that growth is not going to be in major metros. It's already happening for the last 2 years if you look at it.
Actually, Rishal, like to add to that question, you see a lot more of the investments coming in South India compared to the north of India right now. Is
Yes,
that a
because-
trend which is
Absolutely right. South India has taken a maximum share of manufacturing related employment simply because I've been told that the skilling levels are better, the power situation is better, the land acquisition is better. I've been told. But the data is there that Southern India is the one which is taking the lion's share of this new investment in the last 3-4 years.
Do you have any other questions? No, I think, Ritesh, again, thank you so much for joining us. This has been a wonderful session. We're really glad to have heard your thoughts, and this is something which we will learn a lot from. So thank you again.
Thank you, guys. Have a good day.